Webinar in collaboration with KASB. My name is Sana Masood. I'm the Financial Sector Focal for Asian Development Bank in Pakistan. ADB has a capital market development program currently in Pakistan through which we're supporting the government on structural and legislative reforms. And this webinar is part of our efforts to enhance the capital market knowledge by bringing in global best practices and case studies to Pakistan. Of course, access to capital for growth companies and SMEs has been a topic for debate and discussion for quite some time here. And we're very happy to have with us today our three speakers who will shed some light on what's happening in the country and also will learn from the experiences in Europe. We have Shauzab, who is the Commissioner SECP, who will be talking about the current steps, the latest steps that SECP has taken with regards to GEM. We have with us Sebastian Grabert, who is the director at Euronext in Germany, and Gokal Mani, who will be joining us shortly from London Stock Exchange, and he's the head of Middle East, Africa, and India for London Stock Exchange. The session will be moderated by Ali Farid Khwaja. As always, he is the chairman of KSB Securities. So I'll just hand over to Ali Farid now for introduction and to take this forward. Thank you.
Thank you, Sana. I'm delighted to have the three speakers. There are two main reasons. First, I think, given what's happening in terms of the growth in the tech ecosystem and for early stage companies, it's great for the companies to be aware of options which they have in terms of capital raising. And secondly, the kind of reforms which Pakistan has done on the capital market side, I think it are wonderful. And I think it will be great for them to also see the best practices which are followed by some of the largest exchanges in the world. I have been CFO of a company listed on London Stock Exchange, so very close to that, and Gokal has already joined. And Sebastian and I, of course, go way a long back. We worked together at Berenberg and we sat close to us. So with that, I think it will be great to start, and privileged to have Mr. Shauzab, the Commissioner of Securities and Exchange Commission of Pakistan, to join us. Shauzab, thank you for your time, and over to you, and would be great if you can run through your presentation and with some opening remarks.
Okay. Ali, thank you very much. I think this is a great effort. First of all, Shauzab is my name. I'm looking after securities market, and also, interestingly, also IT is another area which actually I'm responsible for within the SECP. Along with me joining is that, and we are sharing, you are logged in from your own account. Nadia Ubaid, she's head of our primary capital markets. So she is also with us today. So I think before starting my formal presentation, I would like to make few comments. I think there are few things which in this country has happened to me which are very positive due to some external and internal factors. There are 3-4 things which I think are extremely important, because I've worked with banks for a long period of time and we have always talked about SME financing and all that. So SME financing all over the period has remained somewhere less than 10% of the total bank loans, and then same like for on the equity side, it was always for the larger companies and all that. So there are few things which I personally think which would help overall documentation of economy and all that. And would be good for and potentially can drive something which was missing and will provide the missing link. So with last 12 months, there is so much focus on documentation of economy under the umbrella of FATF thing which is happening, because previously it was a little bit punitive for the businesses to be in the formal sector. Businesses in Pakistan were making a lot of money. You will see a lot of stores doing very well, and they are opening their multiple branches, and they are growing, on account of their own equity, and simultaneously there would be private lending businesses and people would be borrowing from those businesses, and simultaneously they were making enough money to pay the money back. So there was a huge business case for a lot of things in the country, but they were not sort of transforming and going one to the next level. Second, they were not coming into the formal business thing. So because there were so many leakages and informal economy ways, or I like multiple books, and I am trying to sort of avoid black word. So the thing is that with this FATF focus, that element of being punitive while being in formal business will probably sort of diminish over a period of time. And I think we are at very right juncture of time, number one. Number two, I think the other thing which is very important, the way technology has grown all over the world, and there's now focus at the highest level within government. You can see certain of addresses of the Prime Minister of Pakistan where he fully understands what is the importance of technology company, what is the importance of startup companies. And he has a lot of focus on that, considering the size of the state of the country, and it's a large country, large state, and things happen not very quickly as the way they can happen in probably private sector entities and in smaller countries. But obviously the direction and focus is right. So which I think I personally feel with my experience and all that is something new. Third thing, I think again that is very important macro thing which has happened, and to me that is again very important. That after a long time, and this is not the decision of SECP, it is actually central bank's decision. But what the good thing which has happened is that now currency, Pakistani currency is entirely free float, and market forces determine that. And you might have seen that even with growing reserves, central bank doesn't come in and defend the rupee at the expense of spending. And there's a lot of focus of the government on export increase also. So from that angle, I think that's another major structural issue which is probably resolved, and that will actually result in our yield curve and all those things. So which will actually help in straightening out our structural issues on the financial market side. Final thing which before starting my formal presentation, final thing which Sana also mentioned, that on the legal framework side, now major focus of government of Pakistan and of the regulator is ease of doing business. So whatever is making investors, businessmen uncomfortable, whatever we can do while remaining within the framework of law and whatever doable, our focus is to make it more easier for the people who come into the business, because the current mantra and management and all that is about wealth creation by the businessman. So, and to provide enabling environment. So in this whole environment where enabling environment or the focus of the government is on these things, and there are certain internal elements and there are certain external elements to that, I think we are at a very right juncture of time to make the reforms and take the things forward. So coming to my presentation, so on the first slide, which is sort of I've given broadly where we stand today. I'll just share screen. I'm sorry, I think I have not shared my screen. Just give me a minute, I will do that. So I hope you can see my screen. So on the initial slide, I've given broad numbers, that what is the market capitalization as of August 5, and those numbers are in rupees. So and then what is the structure of our market So you can see that commercial banks are about 18% of the total market, and then about 15.4% in the oil. And this I'm not talking about the growth, but just to sort of give you overall macro view where we stand. So I've just given these numbers, and if required, we can share that presentation also. So mainly, if you can see that is, if I talk at the high level, but that where we stand, the structure of our economy is about 22-23% manufacturing. Again, 21-22% agriculture, and about 50-55% is on the services sector side. And you will not see majority of that being captured on at least on the main board. So what we are looking at that from this initiative, whatever we are taking and whatever Government of Pakistan is taking, that how much we can increase or how much capital we can provide for these services sector companies in addition to manufacturing side also. Current focus is to support export-oriented industries, which can actually sort of integrate themselves into different value chains, and investment in technology and SMEs. So when I took over, we were thinking of from the capital formation angle. When about 2 years back, we made a committee and we were thinking of equity crowdfunding and P2P financing and all those things. So when we engage with the industry players and we talked with the people, there were certain things which came out that there are certain very basic type of things which are already which are missing in our Companies Act or our legal framework. And those were that for example, startups were not defined. Then there were so we actually in this year what we did is that we through ordinance proposed changes in Companies Act, and the definition of startup was introduced. Definition of startup was introduced, and it was defined as the company that has existed for less than 10 years and have annual revenues below 500 million and in a business which is innovative and scalable. Then there was no buyback option, because the buyback option was only available for listed companies. So that was made for private companies also. Further issue of capital, and which actually opened the way for sweat equity and issue of shares at in unequal numbers against consideration other than cash, was also made available to private sector companies. Then beyond that, we have open regulatory sandbox structure in which different people have applied to us for different products. So, and we are expecting to sort of announce those results, and we will take about 3 to 5 projects in the regulatory sandbox structure. So, so the first thing was how to make this legal framework more doable or more workable for startups. Next level is obviously they need multiple level of financing. So the private markets, meaning private equity and all those things, need to be changed. So we have massively changed private equity regulations. And there are certain things which are probably not in direct control, but we are simultaneously working. So the other things which we are currently working at is that we want these companies to actually, they want certain fiscal incentives. So we are working with our FBR and we are working with State Bank to facilitate in terms of currency movement and providing them the type of fiscal incentive that they are required. And in terms of different scales of the market, what will happen is that what we have thought about is that first we have worked on our growth market board, which we have created, which I will cover in the next slides. And under growth market, then there's a private market, on which what we have done is that we have relaxed regulations on the private equity side. And finally, for ECF, we needed certain changes which have to be made in the legislation. So currently, we, under this ADB program and with support of ADB, we are actually trying to amalgamate our 2 laws, which is Futures Act and Securities Act. And we will make certain changes which will actually enable participation or further participation of retail investors, both on the growth board and in the equity crowdfunding space. So I've just given examples of few companies which have done very well in this country. One is Zameen, which is online real estate portal. Real estate is one of our choicest asset class within Pakistan, and this company, which was formed in 2006, it has done very well. It has raised $29 million in financing, employs about 3,000 people and 550,000 new listings every month. And because I'm a quite a regular visitor of website of this company, so it is a very functionable and interactive application. So then we have Airlift and Bikea. Both of these companies are logistic-oriented companies. Again, these are excellent concepts, and they are able to raise money through private markets. So the amount of opportunity in this country is huge, because with 220 million people and mostly like what I've already spoke about is that mostly businesses are very profitable. But the issue is how to sort of channelize that success, how to sort of take it to the next level, how to sort of how people can get benefit out of it, how you can further enhance entrepreneurship. That is the biggest challenge. And with this documentation thing coming in, where actually people who have white money, who are more dependent on their skills, will have more opportunities. So I think that is the basic thing. This is something which is I've already covered, but this is here in the presentation: informal avenues, friend, family, blah blah blah. Then there's certain things which probably I have not written over here, but then there are private lending individuals also in this market, and they provide a reasonably large amount of capital. So because lack of availability of capital, so they lend money based on high interest rates. Then we have bank and financial institutions. As I've told you earlier, that bank and financial institutions address to very, very minuscule size of the needs of these institutions, because they are more comfortable in lending to government of Pakistan through bonds and all that, and then lending to top tier corporates. So, and because there's a huge amount of liquidity in the market, but they can place that liquidity in government bonds. So SME needs are largely unaddressed. So with the changes which I feel which are already happening and which we are quite positive about is that on the investing side, I think government of Pakistan is enhancing the investors where actually the banks would become not about 80, because currently government bonds, around 83% of government bonds are held by the banks. So now pension funds are becoming larger. Now insurance companies are becoming larger. Retail investors are also interested. And with the changes where actually international investors can invest in government bond, so the appetite or availability of bonds for the banks is declining. So that I believe that will also open up the opportunity and give them, push them to lend towards SMEs. Then venture capital and private equity market. Private equity, there are three large components to it. One component which obviously we do, which is regulating those private equity businesses. But then there are two other angles, two other elements of this equation. One is our central bank, because a lot of money which comes in wants to go out, and there are certain one or two regulations which needs to be amended. And I hope, and I believe that they are already working on it, and it will be addressed. The third element is on the fiscal incentive side. So again, the work is going on. Maybe in next few months, we might have something positive on that side. On the stock exchange, we have two boards. One is the main board, which on which I gave you macros just 2 slides earlier. The second is Growth Enterprises Market or Alternate Board. This was the one which was created, I think, about 3-4 years ago, but now we have completely revised its rules and everything. So, but what happened is that once we did that, about 1 month after that, this COVID thing hit the markets, and whole business whole business activity went into the tailspin. And finally, we had to sort of, now we have opened and we are expecting some positive activity on that side. Then final thing is crowdfunding. Crowdfunding we are considering under this regulatory sandbox structure, but full scale launch, because we have currently a framework or you can say prototype of our regulation which is already in place. We have discussed with the market and everything, but without retail, the feedback which I got is that without retail participation, it will not really pick up. So what will happen is that we have already proposing certain changes in our securities legislation. Once that happens, then actually crowdfunding can be generated from retail also. So we're just waiting for that. So these are few key things which we are addressing in our Securities Act legislative change. Is number one is recognizing oblique allowing equity crowdfunding as a platform for capital formation, reducing the regulatory approval, including approval of prospectus towards disclosure base. So what we are doing is that this year, before this year, it was not allowed to list loss-making companies on the main board. So what we did is that allowed listing of loss-making companies on both the boards, meaning our alternate board and our main board. So now any loss-making company can get itself, and probably Pakistan is one of very few locations where a greenfield project can also get listed on the main board, and simultaneously alternate board it is also allowed. So now we are moving from, actually it was previously approval based, and now we are largely moving to a disclosure based regime, for which we need legislative approval, which we are already recommending. And operational matters and procedures that require update and regular interval are included in subsidiary legislation. So what we're trying to say over here is actually we are making the basic legislation very flexible, and subsidiary legislation is much easier because that is being controlled by the securities regulator, and if required, that can be changed in consultation with the market. So basically what we will do is that under the Securities Act, we will have a basic framework and enabling clauses over there, and then the remaining components will be handled by the securities regulator, and which can be actually be more flexible in terms of addressing the needs of business. So directly listing and exempt offering. So it was currently in its current form, it's very straight-jacketed, but we are trying to make it as flexible as possible and have different things both for the equity and the debt listings. So we have just highlighted, as I will quickly skim through that because our main focus is on the growth side. So we will, one thing I've already explained, that what on the listing requirement or initial IPO basis, what changes we have made. One was the profitability requirement was relaxed. Second, greenfield projects were actually allowed, but now we have made the criteria much more objective. Okay. So then one final thing which I think we should highlight is that our exit offer mechanism, we have for the investor protection, we have brought in exit offer mechanism that if some company changes its basic business model and still want to continue, we will provide exit mechanism for the minority investors. Okay, I will not go into details of a lot of things, but I will just take 1 or 2 minutes in introducing what we are doing on the GEM. GEM is actually a platform for growth companies. No profitability requirement, no approval required from the securities regulator. Listing application has to be submitted. It is very easy and very comfortable to go over there. Right now, only high net worth individuals can, other than institutions, high net worth individuals can also invest in those shares both on secondary and primary side. But with the proposed changes which we are actually looking at in our Securities Act, we will actually enable our normal retail investor also to invest on this board. So, so I've tried to sort of cover that what is the high level thing and what we are trying to do and what we have done to date. One thing which actually, although it is not directly related, but one thing which I would like to highlight is that what happened in 2008 in this market was that market was closed under this global financial crisis thing. So if you compare ourselves with the regional market, Pakistani market was not closed during these Corona days. Our competitive market like Sri Lanka and Bangladesh, they were closed, and despite immense pressure and logistics and whatnot, we ensured that markets should remain open. So just to sort of give you the focus that how the regulator is looking at the markets right now. Thank you very much. Now I'm open for questions.
Thank you for that, Shauzab. We'll take questions right after the presentations for all the three participants. This was extremely insightful. And now we can jump over to Sebastian Grabert, who's joining us from Munich. And Sebastian, would love to hear more about Euronext and how do you attract early stage growth companies to list on your exchange?
Yeah, Ali, thank you very much. And thank you for having me here today. It's a great pleasure, especially to you, Ali, since our paths are crossing again. I'm very happy about that. I would also like to share my screen, if that's somehow possible. Just give me a second. So I hope everybody can see my screen right now.
Yes, we can.
Perfect. I think it's was very interesting, Shauzab, and thank you very much for the introduction to this webinar, because it's you know, for me, it's great to see that you're basically facing very similar challenges to what we see here in the continent in Europe, to the 6 countries where Euronext is based. But before we go into the details, let me just quickly introduce you to the Euronext markets. And I would like to start actually with that overview, with that map of Europe, as you can see, and with the different locations Euronext currently is in. Maybe also a bit of history. So basically, Euronext, you know, traced back around 400 years right now. And it has been actually a big change, let's say 20 years ago, when Euronext combined 4 European stock exchanges, which were the Dutch stock exchange, the Belgium, the French, and also the Portuguese stock exchange. So that happened around 20 years ago. And we already became with that quite a significant stock exchange in Europe, quite a relevant one. And then I think it was in 2007 when the New York Stock Exchange, NYSE, actually acquired Euronext, and we became NYSE Euronext. That relationship actually ended in 2012. And basically from the largest stock exchange in the world, which NYSE Euronext was back then, we became basically the leading European stock exchange. From 2012 onwards, we made another IPO in 2014 after we've been set free. And since 2014, we are listed obviously on the Euronext stock exchange as well, completely independent, with a few anchor investors securing out their independence. Now, since 2014, actually, 2 other stock exchanges have joined our federal model of stock exchanges. First of all, it was the Irish Stock Exchange 2 years ago, and last year it was the Norwegian Stock Exchange in Oslo. And with that combined, actually, Euronext comprises 6 different local stock exchanges into one company. You know, the huge benefit for investors and companies alike are the unified trading book. So basically, we operate only one trading book, which is quite a substantial advantage to everybody involved in the stock exchange world. Just to put that also into numbers, currently, we have roughly around 1,400 companies listed on Euronext. This includes the regulated market called Compartment ABC, but also the MTF listed companies, mainly on the growth segment, but also on Access and Access Plus. Well, I'll come back to that in a second. The slide shows we have a combined market capitalization of 3.3 trillion euros. Now, that number actually comes from the end of March 2020. As everybody knows, it was basically the peak of the Corona crisis, and right now the market cap is more somewhere around 4.3, 4.4 trillion. As I always said, we are present in 11 different European countries, out of which 6 of these European countries, we represent the local main stock exchange. But we also expanded our franchise into 4 larger European countries, namely Germany, where I basically started also 3 years ago, where we opened up the office here in Germany, but also in Switzerland, in Italy, and in Spain, where we all operate rep offices and sales offices, mainly for our listing activities. Two or three more remarkable figures are that we actually, the companies listed on Euronext comprise more than 50% of the Euro Stocks index. So basically we have 27 components listed or constituents listed from the Euro Stocks index. And, as I already mentioned, we are leading in Europe, both in terms of large caps, but also in terms of SMEs. And with 480 listed technology companies, we are also in that, from that perspective, we are leading here in Europe. Now, to put that more on a global perspective, currently we're ranking number 5 in terms of all stock exchanges worldwide. As you can see in this bar chart, the 2 US headquartered stock exchanges, namely NYSE and NASDAQ US, they are number 1, number 2, followed by the Japan and the Shanghai Stock Exchange. And then there is Euronext, and here the correct number shows up, 4.4 trillion euro of market capitalization. Now, coming a little bit more to the SME and mostly to the technology SME worlds, as you can see, we have currently 481 listed technology companies. Most of them, as you can see on the left-hand side, are somehow being allocated to the TMT world. But also we have quite a substantial number of clean tech company listed, where we rank number 1 amongst the stock exchanges here in Europe in terms of the number of listed companies. And the same applies to life science. This is also reflected in the middle donut chart. We have an aggregated market capitalization of around 600 billion euros, again, which is quite substantial. And close to 200 tech companies actually listed on the Euronext market since 2013, which reflects the high momentum we're currently also enjoying. Moving on to the next slide, I would like to show a few flagship IPOs we've seen of unicorns. Very, very, famous names like Adevinta, also Adyen, for instance, which I believe in the fintech world is a big brand, especially after Wirecard have almost left the market. And then we also see, a variety of other sectors being active on the market, like Neoen, which is a flagship clean tech company from France. We've also seen a German unicorn company, X-FAB, which is the foundry in the semiconductor world. They've raised over 400 million back in 2017, worth 1 billion of market cap. And in terms of food tech, with takeaway.com and the e-commerce world around showroom, privy.com, so you basically see that each and every year we have several unicorns which are interested in listing on our stock exchange. And there again, you see that the DNA of Euronext is also being reflected, that we attract the talent and the IP of different European countries onto one stock exchange, and that is Euronext. Now, leaving a little bit the unicorn world, where I believe not everybody in the audience is maybe located. We also have demonstrated a very strong track record in what we call the international mid-caps from across Europe, but also from outside of Europe, which successfully listed over the last couple of years. We've seen, for instance, just last year, Hoffmann Green Cement Technologies from the clean tech world. We've seen a UK company called Acacia Pharma. We've also seen the French company ProTrace, which is active in 3D technology, which normally have market caps somewhere between 100 to up to 300 million of euros. But then we also have these fast-growing small caps, which we are really concentrated on to support in their growth story. And there you also see a few examples on the slide. Now, just a few more numbers on the technology franchise, the listed technology franchise we have here in Europe. As you can see on the left-hand side in the donut chart, you have really a huge and a really deep understanding, what we comprise in our market, starting with a huge portion of software companies, over to hardware and robotics companies, media entertainment, etc. And also some, rather new sectors, which are, partly hyped, which, like, for instance, the fintech sector, there we already have 21 companies listed on our markets. I already mentioned that we have a very strong franchise from life science companies, both in medtech as well as in biotechnology. You see that we have in total 109 companies listed. And that also goes to the clean tech franchise, which we have, as you can see, the details on the right-hand side. Also, worth to mention is basically the granularity we have in our markets. You can see on the bottom, and that we have obviously the majority of the companies are somewhere up to 150 million of market cap as usual, and the smallest one also reflect the highest number of small caps listed. Well, we also have a decent number of what we call mid cap companies up to 1 billion of market cap. So for every institutional investor, basically, be it a micro-cap, nano-cap investor, or just a small mid-cap investors, we have, the deepest and broadest franchise of technology companies listed. Also something, worth to highlight, also to add to what Shauzab said, that, you have that regulated market where the majority of these companies are being listed, the so-called EU regulated market, or you also have, a multitude of these companies being listed on our growth market, where they benefit from, easier listing requirements and follow-on requirements, and they make heavy use of that segment to become listed and to raise the growth funds. Just to add a few other numbers from what I said, in total, all the tech companies since 2013, they raised in total 10 billion. On the right-hand side, you also see the market cap which has been added through these IPOs. You see a spike in 2019. That was a listing of Prosos in Amsterdam, which was a listing of almost 100 billion euro of market cap. And yeah, just gonna skip these slides and just gonna jump into the actual topic of the day, which is obviously how we actually support growth companies here throughout Europe, with our initiatives from Euronext. So basically, this is a quick overview slide. What we do is we have that what we call the European Rising Tech label, where typically a tech company which enter and enjoys a multitude of multiple services which we offer for free for these companies. For instance, they receive a for free research coverage which is being compiled by Morningstar, which helps obviously to gain some visibility on the market, also to gain some credibility on the market once you're listed. And as we all know, this is one of the most pressing issues a small mid-cap company has on the market, that he doesn't have the right attention which it deserves. And there's also an index we've created for technology companies, which we call the Tech 40 index. And there you have the most promising technology companies are being put into that index, where obviously institutional investors can follow this kind of index as a benchmark to invest in. And one of the programs I would actually like to highlight today, and with that I'm actually going to finish my presentation, is the so-called Tech Share program. Now, the Tech Share program, on the idea of that was basically that we've seen that there was a lot of interest from entrepreneurs throughout Europe to understand more of the IPO. And since we don't have exactly the same momentum, I would say, over the last couple of years when it comes to IPOs of growth companies as compared to the US, for instance, we thought, why not actually guiding these companies and take their hands and educate them a little bit about the option of an IPO, as the level of understanding and the level of education maybe is not that developed as we wished for. Now, with that objective in mind, we actually created a program which is called Tech Share. And Tech Share is a pan-European initiative in all our 9 countries. We are active currently, and we basically group only tech companies and the entrepreneurs, slash C-level management, into a 6-month program. And the 6-month program actually starts with a fantastic campus, which is normally held in Rotterdam. And basically ends the 6th program also another campus, weekend in Lisbon. And then the second pillar of the program is basically to have 4 in-depth workshops in the local locations, together with the entrepreneurs, as well as with all the stakeholders of the working group in an IPO process, namely which are the investment banks, the audit firms, the law firms, and the financial communication agencies. And as you can see, what we've done is we've grouped really a fantastic group of entrepreneurs from a variety of technology sectors, highly represented our biotech companies, but also software and clean tech companies, as our stock market is pretty famous for these kind of subsectors within technology. And we group them together, we teach them basically, and then what's interesting for these companies is also that they learn a lot from each other. And the perspective obviously is that we would like to hope to get some business from the IPO side from a perspective of 12 to 36 months after completing this Tech Share program. And with that, I would also like to welcome, obviously, and to invite the audience, technology companies from Pakistan, also to be active for this program and be in touch with me to talk about that, as you also would like to broaden that Tech Share franchise going forward. Now, I think with that, I would like to to basically finish my introductory slides. Ali, back to you. If you have any questions, I'm happy to take them.
Thank you. I have a lot of questions, but we'll hold that on for the Q&A part. And this was fascinating. I loved how active you are and how many programs you have to encourage an outreach to early stage companies and to teach them how they can access capital markets. With that, over to Gokal Mani from London Stock Exchange. Gokal, thank you for joining us. And I know you also have a presentation, so you can also share your screen. And love to hear more about AIM and LSE, which is a very international market. And I think the few Pakistani companies do have their GDRs listed on the London Stock Exchange. So there is already a connection between Pakistan and London. And I know that the UK FCO is quite keen to strengthen the connection between the two markets. So really excited to hear about your story.
Yes, thank you. Thank you, Ali. And thank you to both Shauzab and Sebastian to have given very good presentations before me. I'll just briefly introduce myself. My name is Gokal Mani. I'm responsible for Middle East, Africa, and South Asia for London Stock Exchange Group. I've been with the firm for about 3 years. I joined them after spending 16 years with Bank of America Merrill Lynch. Now, I think what I would like to cover in my brief presentation here is, first, I'll talk to you a little bit around what we're seeing in capital markets on a global basis, what kind of transactions we've seen, where does IPO momentum stand, where does follow-on activity stand. So we'll give you some broad thematic around capital markets. Number two is I will go a little bit into our technology sector, tech capabilities, but I think Sebastian has already done a fantastic job around where European ecosystem sits with tech. So I'll kind of whiz through that pretty quickly. And then lastly, we'll give a little bit of color on what are the bookends of our markets? Where does AIM sit, and where does our premium segment sit? And who should gravitate towards which segment? And then I'll end it there. Let me just check if my screen sharing is working. Please, just 1 minute. No, I don't think it is. 1 minute. Really sorry about this again.
No problem. And in case there's an issue, I can always share it and I can run through it.
Oh, wow. Actually, I'm so sorry. I am sorry.
Gokal, can you hear me?
Yes, can you hear me?
Yes, now I can. There was a disturbance.
Sorry,
let me just open your slide.
Thank you.
I can...
Thank you so much, and apologies. I should figure this out earlier.
Just 1 second. I'm just downloading it.
Thank you. But at any rate, well, thank you, Ali, for doing that. And I think while that's happening, I'll kick it off because I think the slides are great, but I can walk through most of it verbally. So listen, on the London Stock Exchange Group side, what distinguishes us from some of our competitors is, yes, we are a stock exchange, but that's only a part of what we do. We're actually a very, very diversified market infrastructure operator. We, just like Sebastian walked you through, like Euronext is listed on Euronext. Our group is also listed on London. Our market cap stands at about $40 billion US. We've got three main revenue streams in our business. We have information services, which contributes about 35–40% of our business, and the flagship brand within that is FTSE Russell. The main competitors towards that subsidiary or business unit over there are the likes of MSCI, S&P, and IHS Markit. Next is our post-trade business, which is all about clearing and settlement. Our brand over there is called London Clearing House. And over there, we compete with folks like Clearstream, that is owned by Deutsche Börse, Euroclear, which is its own company, and SIX's own, the Swiss exchanges, CCP is who we compete with. And then, of course, we've got the London Stock Exchange as an exchange business. And over there, we compete with the likes of Euronext, ICE, Hong Kong, NASDAQ, etc. We're in the midst of a very large announced acquisition that's going through the motions in Europe at the moment. It is a global business with about 20,000 employees. It is called Refinitiv, and that business has an enterprise value of $27 billion that we are in the process of acquiring, and hopefully we complete that in the coming months.
Your slides, Gokal, your slides are on. So I'll just run through just keep on telling me and I'll move through them.
Yes, thank you. Thank you very much, Ali. I'm on the next slide now, slide 3. Just some big, some broad numbers. We've helped companies raise over $10 trillion on our variety of markets over the last decade. And then the two other numbers actually relate to the other two businesses I walked through. The 1.2 quadrillion is $1,200 trillion US, and that's mainly the amount of nominal derivatives and mainly interest rate swaps, multi-currency interest rate swaps, mainly USD and Euro swaps, cleared at London Clearing House, and the FTSE Russell business has $16 trillion of assets benchmarked to it. Next slide is around where global markets are. I'm not going to spend too much time here. The punchline on this slide is Europe and the UK on a year-to-date basis are still down on the year. China is up. China's up 10% year-to-date, and while Hong Kong is down, and the US is about flat. It's about 2% up year-to-date. But that's kind of the broad summary where we are. I will go through the next. We can skip actually to the next slide after this. What have we seen this year? Well, this year, has been a slightly unusual year in that, in any, typically in any year, we see about 100 IPOs on our market. And that is from everywhere, from the UK, from international, from you name it. We typically have between 90 and 120 IPOs in any one year. That's not been the story this year. This year, we've only had about 12 IPOs year to date. However, I think the distinguishing feature of this year, while IPO activity has been slow, and we all know the reasons why, it's actually been a follow-on activity, which is the role of existing companies raising further capital. We've had 387 follow-on transactions. This slide was actually made, and it says 296 since March, but the total number since January is actually 387 from January. And how much has all of this raised? Today's number is 26.5 billion raised, 26.5 billion pounds raised year to date across those follow-ons and IPOs. What does that tell us? What that tells us is, it's not about it's not just about our market or Euronext or the New York market. It's about going public. Once these companies or your company is public, you have a path to capital raising, whether it's primary activity or shareholders selling down, that is there for you and available for you, even when markets are choppy. So even though the IPO market has been weak, follow-on activity has been strong because existing listed companies have been raising capital. Just on the next slide, in our market around the green economy green economy segment, we're doing a lot around the green space. But I'll happily take questions or follow up with this at a later time. Moving on to slide 9, I'm skipping a slide. Is just a flavor of who are all these companies who've raised all this capital recently. Just in the month of sort of June and July, these are some of the large follow-on activities. That's slides 9 and 10. So it just shows you the volume of capital raising available once you're listed. Page 11, and now I'll start to try to boil this down a little bit more into relevance. We just celebrated the 25th anniversary of AIM. AIM is our kind of high growth market, or let's call it alternative market that allows high growth companies to come raise capital in a variety of sizes. And I'll present the bookends of where does AIM sit, where does our main market sit in a short moment. The next bit, and I think we can leave this slide here, Ali, but the next bit, I don't have slides here for the next bit, but it's about our technology. It's about our technology offering and space. And just to give you a little bit of color on that, we have about 200 companies, 200 technology companies on LSE with an aggregate market cap of about $600 billion US. Out of those 200 companies, about 130 of them are software companies, aggregate market cap of about 250, so 250 billion. So we've got software, we've got general tech. Now, who are these names? Who are some of the high-profile names? Sebastian took you through a real darling of the recent stock markets in that of Adyen. And I think that has been a phenomenal IPO for the markets, for General Atlantic. We've all seen the various sell downs. And, on our side, we've had companies like Network International, which is again in the payment space, Avast, which is cybersecurity. And then, names you would have come across through your travels in the UK, like Trainline, which is in the business of selling, train tickets, Micro Focus, Aviva, Sophos, etc. These are some of the household names in tech that have chosen our market last year. Of course, Trainline and Network International were some of the most high-profile ones. In tech and in that tech sector, we often get asked the question, especially in discussions, do we have to be revenue generating in the tech space? Do we have to be revenue generating? And do we have to be profitable? And I think it's not about what the stock exchange or our regulator wants. Our regulator will it doesn't matter from a listing requirements perspective or a regulatory perspective. You have to comply with some listing rules, but profitability and revenue generation are not there. It's actually it's a market, and it's an offering that gets played out in front of investors' eyes. Will the investors accept it or not? So I think some markets, mainly the US markets, do accept companies when they are not revenue generating. I think our market, the London market, expects tech companies to be revenue generating when they go public. That includes AIM IPOs. Generating. Do you have to be profitable? Do you have to be generating profits? It's great if you are. And so Network International, Avast, Integrafin, AJ Bell, etc. were. But frankly, it's not needed. But can you be unprofitable into the distant future? Probably not. You need to show some path to profitability in 0 to 18 months, in 0 to 2 years from IPO. So that's kind of a little bit of thematic on tech. Now going back to this slide deck into our AIM segment, and I think a useful place to go actually will be that first slide of that next section, where we'll just thank you so much, Ali. So here, the next one actually we describe, where does AIM sit and where do some of our other markets sit? And I'll just go through that. So I think middle of the slide, you see where it's written, it happens to be written private equity, but it's actually what I'm trying to draw the attention to is the AIM bucket. Now, so broadly speaking, if you're a high growth or a company based internationally, let's say Pakistan for that matter, you have the choice to enter our market, the London Stock Exchange, through these 4 channels: the AIM channel, the high growth segment, the standard main, or the premium main. So the distinguishing feature is the three on the right, which is high growth, standard, and premium, are what we call the main market. That's LSE main market, where the regulator and the regulatory oversight is conducted by the FCA, and the process is their process, and then we are the listing venue. And the AIM market is where we provide the regulatory oversight. Your prospectus, your offering document, etc., is read by our team, and we sort of regulate that market. A company can choose to go wherever, happy to take questions in a bit to understand and advise where a company might fit. Also happy to do that as a follow-up, but just some broad averages. I think if a company is looking to raise between $10 million and $100 million, and it enjoys a market cap of about 50 million to 200 million, often those sort of companies go to AIM. In fact, the average capital raising or average IPO size on AIM is about $30 million, and the average market cap on AIM is $150 million. These are averages. On the main market, the numbers are much bigger. The average main market company is about $600 million of market cap, and about $120 million of IPO size. Now, where do these averages come from? How many companies do we have listed in our markets? We currently have about 2,500 companies on our markets. That's everything. That's main market, AIM market, GDRs, you name it. Ali's reference to the GDRs from Pakistan are GDRs sit within our standard segment. So that's kind of the the middle one in the last 3 segment, for example. So we have about 2,500 companies listed overall. About 1,000 are on AIM, and about 1,500 are on the main market. And so kind of, that's where companies go. If we just go forward a couple of slides, I'll just see what else needs to be covered here. I think we've gone through most of this. Let me just see what else is pending. Yep, this is done. And I think this kind of just leads us to maybe a slide on the timetable. How long does it take to put together a typical IPO on AIM? We're talking about, roughly 4 to 5 months. And then, the question we often get is, okay, an AIM IPO is 4 to 5 months. How long is a main market IPO? The answer is it's all about the same. 4 to 5 months on AIM, 4 to 6 months on main. It's actually the IPO process is pretty well defined. What sometimes takes longer is actually the duration of time it takes for a company to get ready to kick off this process. And this is it takes 4 to 5 months once the company and its systems and its budgetary processes, SAP systems, etc., are in a state of readiness. Sometimes it can take a little while to get to this stage, but it's about 4 to 5 months. And then I think the last slide where I'll finish off is some of our listing requirements. And here I tie back to those segments in our main market and AIM really. And this is a busy slide, but I think the columns to look at is the first column, which is that premium segment. It's the third column, which is that typical standard segment. High growth segment is what we walk through with you as well. DRs, is a unique segment available to some dual listed issuers. And then of course the AIM market. One of the critical distinguishing features, if someone had to ask me why go AIM and not main, is if you think that your company is one that is a repeat and a serial issuer of primary capital. If that's the case, the AIM market gives you that flexibility for high growth company to keep dipping in and dipping out of the markets and being able to raise that capital non-preemptively. By non-preemptive, we mean that you don't have to go to your existing shareholders when you raise that capital. You can just go to new investors. On our main market, once you're over a certain size of capital raising, you have to do it via a rights issue mechanism. But I'll end there. been really great seeing everyone. Ali.
Thank you for that, Gokal. And what fascinates me in both of these presentations was the legacy of history, how much history both of these exchanges have, I think, going back hundreds of years. And secondly, the breadth and depth of your offering. I think in the case of London Stock Exchange, as you said, it's not just an exchange; it has a lot other functions as well. And in the case of Europe, the number of companies which were listed on the exchange. So it's fascinating. Now we are open for Q&A. We are running slightly out of time, but for asking questions, please put your questions on the chat, and then I'll put it up to Shauzab, Sebastian, and Gokal. And maybe I can kick off with the first question. Gokal, London Stock Exchange is a very international market, and I think AIM is one of the most international markets in the world. And you gave the example of Network International, which of course is the largest payment company in UAE. It's a spin-off from EBRD, and at one point Abraj owned it, and then they sold it to General Atlantic. So why did they choose to list in London rather than listing in the local market?
Listen, Ali, that's a really good question. And truth be told, it was a fierce fight, right, between LSE and DFM to get that. Why did they ultimately choose London over Dubai? I think probably maybe two main reasons. One is the sector, the peer group, the comparable peer group.
Gokal, I think
payment. There is no peer group that exists regionally. I think the peer group for this kind of a business exists on London, and of course it exists on Euronext. It exists in the US, and it exists in Asia, in Hong Kong. But you've got four places where that peer group exists, and that's about it. So one is peer group. Number two, another reason is the ability to do secondary monetizations. So accelerated sell downs post IPO. That is a market structure that exists on our market. It exists on Euronext. You can just do accelerated deals on an overnight basis, all secondary, to as much as the market would tolerate. That mechanism and market structure just does not exist locally. So I think what General Atlantic, Warburg Pincus, and ENBD took the view is that they're going to be subsequent sellers. And they want, and you've seen what they've done. They have almost entirely, generalizing a bit, from owning 100% of the company in April of last year, I think today, all three of them together own 8 or 9%. So they've gone from 100% to 8 or 9% in the space of a year and 4 months. And they've been able to do it through secondary market transactions, all accelerated basis. You could not have done that on the DFM. And the third reason was actually Network International also wanted the ability to do primary capital raises, non-rights issue primary raisings of capital on a market. And they did that 2 weeks ago. They raised £250 million to buy an African payments business called DPO. Again, you can't do that on the DFM. You have to do that on a rights issue basis. So part of it was peer group, and part of it was market structure.
No, thank you for that. And you're totally right that in the payment space, London Stock Exchange has success stories such as WorldPay, which was acquired by the US payment company, PaySafe, which was acquired by Blackstone, and SafeCharge, which was acquired by Nuvi from Canada. So there's a lot of investor appetite for those companies. And for this audience, what I think is very interesting is that Network International did not have any business in the UK, but still they chose to list over there. And Gokal, another question from an international perspective. There are many companies from Israel, early stage businesses from Africa, a couple from in the older days, there were a lot of Russian companies which were listing in London. So London Stock Exchange, early stage companies have also gone public over there. What do you think is the appetite? Do you think there is appetite for Pakistani companies to go public in London Stock Exchange?
Well, thank you for that question, Ali. I think that, well, it is an unprecedented space, and the question is without precedent for an early stage company from Pakistan to go public. There are some risks, and fund managers will risk adjust for certain degree of market risk, political risk, exchange rate risk, etc. That being said, I genuinely think there is a scarcity of non-UK, non-European tech businesses coming onto AIM. Now, whether they will come from, the far east of Asia, India, Pakistan, Bangladesh, Sri Lanka, or parts of Africa and LATAM, they're all going to be looked at as an international company. Pakistan might be looked at with the similar risk parameters as some of those geographies, but that's part of the game. It is going to require a higher risk premium than a typical UK or European company. But I actually genuinely think for tech businesses, there's scarcity value, and there will be appetite for the right structured deals.
Absolutely. Thank you for that. And asking the same question to you, Sebastian, are there examples of international businesses listing on Euronext? And do you think there is investor demand for such listings?
I certainly do. Yes, and actually there has just been a listing of a Hong Kong-based but NASDAQ global market listed company called Aptorum, which is active in the biotech world, just I think 10 days ago in Paris. Basically, they didn't raise any, just as an example, they didn't raise any money at the time of this listing, but they wanted to make sure that they were actually present on the European continent as the largest combined economy zone, so to say, in the world. And just another example from actually another Hong Kong, based company, which was active in telecommunication sector, which got listed last year around summertime as well. Also to make sure that they have a certain proximity to their larger future client, which could be a large aircraft producer from France. So what you see, and what basically, besides what Gokal has just mentioned, in terms of the follow-on, activity, which is obviously what you want from a stock market to secure your growth path in the future. You also want to have that, besides the proof of the concept of your business model before going, but you also want to be close to your future customers. And what we offer is, for instance, for companies which come to the market is to go to Paris, for instance, at the time of the IPO or the technical listing, but at the same time to, have a listing in Brussels or in Amsterdam, wherever we see fit, whether the company sees fit in terms of the operations, to actually increase that credibility on the market, to be, potentially also invested in their local indices, which is quite obviously important, when you open the newspaper and you see, okay, this company from outside of Europe still wants to, is incredibly active in the country, and they want to gain some market share, for instance, and want to duplicate the success from their home country. So I believe, yes, there is demand. Actually, the demand has increased over the last couple of months, I would say, maybe not least because of the political tensions we see in the US and potentially in parts of Asia as well, that they see maybe the continental Europe zone, and obviously the largest stock market here, as a safe haven, basically, to secure funding for the future as well. That is at least what would be here from the market, and that's what we see also in the registrations for the market.
Thank you for that, and that's a great point, that listing internationally can also help you establish links, show the credibility that you have links with your end customers or the market over there. So that's a very interesting point. Going to a question, we have a question from the audience. It's from Abhishek Hedge from ADB. And he's asking both of you that, do you let loss-making companies go public? And you've already answered that, but the second part of the question is that in these loss-making companies, do you allow retail investors to participate? And if you do, then how do you protect them? How do you protect retail investors from losing money? And Gokal, particularly for you, and I'm adding to the question that on AIM, there have been examples of some companies going bust. So how do you deal with protecting investor interests as well as exposing them to loss-making but high growth companies?
Yeah, that's an interesting one, Ali. Thank you. You are right in that if we had to dissect the market, we would find more loss-making businesses on AIM than main. So I think we allow loss-making businesses. I would say if you're a loss-making business outside of UK, Europe, US, so if you're a emerging market tech business making losses, you can make losses, you can list, but I think you're going to have to show the path to profitability. I think that kind of an IPO in today's market will only work if in that research analyst focus, call it 18, 24 months, 3 years at most, you are showing that path to profitability. So I think that's the nuance around loss making. Now, how do we allow retail investors to participate? Actually, we have more retail participation in our AIM market than our main market. Our main market has become a very institutional market. Our AIM market is getting more institutionalized, but it's still quite retail centric. And I think there's what can we do to protect retail interests? We have teams of people and a lot of technology and capital on market surveillance, market resilience, making sure the markets are running, that there is no manipulation, there's no insider trading. We've got all our regulatory systems to oversee and monitor that. But for a retail investor that loses money because the share price behaves in a certain way because that company did not break into profits or continue to make losses, that's the risk reward dynamic that an investor takes. It's a buyer beware, eyes wide open. You're getting into AIM, risk and reward. There's nothing more than surveillance and resiliency that we can do. Ultimately, it is for the investor to make that call.
Sebastian, your comments on that?
So I guess I would actually 100% agree what Gokal said. I mean, the responsibility of the stock market operator lies in the market surveillance, for instance, and see whether everything works according to the rules set out, be it by the regulator or be it in the MTF world by the stock exchange itself. Taking risk, for potentially gaining, but also making losses is a part of the game. And when it comes to the question around retail investors, I believe it is fascinating for me actually every time to see that depending on which country we are, and for instance in the 6-country world of Euronext, there's different appetite for equity investing in these different countries. Just give you an example: the retail participation in equity investments in the Netherlands, for instance, is according to a latest statistic around 30%, whereas that in Germany, for instance, is still persistently below 10%. And that has something to do with the equity culture, which has been driven and which has been constructed over years, if not decades. The risk appetite of people, and also tax incentives, which is the result maybe on how you deal actually of, how you actually dealt with prior crisis, for instance. So there are some interesting tax incentives specifically for retail investors, for instance, in France as well, which allows French retail investors not only to invest in French incorporated French listed or France listed stocks, but also into European corporated companies, which are listed on the French stock exchange, for instance. So it allows them basically to have interesting tax incentives for European companies listed on one stock exchange. And that actually lets me to just figure out two numbers. What we've seen over the last 5 years in terms of subscription rates for life science IPOs, where we've seen more than 30 actually over the last couple of years, is that we had subscription rates over 300%. And that actually got translated into allocation rates around 18%, which is fascinating to see that, retail investors, at least myself as well, though I've been active in capital markets for the last 10 years, I don't understand a lot about biotech. I'm not a sector expert. And still there is a lot of interest in these kind of sectors to actually take part in the development of this future, tech sector. And not least, maybe one of the only or the few benefits we had from the COVID-19 crisis to realize that these kind of, sectors in the asset class of equities is actually highly benefiting and will so, I guess, in the future as well. So this is what you see in terms of retail participation. It really depends on the location you are.
No, thank you for those both. Thank you both of you for those answers. And you're totally right that retail investors actually want more speculative and more. Their appetite for risk is much higher. And I think we know that now from the world of cryptocurrency. The amount of global interest in cryptocurrencies, which were an unregulated space, despite of the risks and despite of having no revenues, forget about earnings. And it just shows that if the desire to protect investors or the apprehension of them making losses will just push them to even more riskier asset classes. And I think the example which you gave, Sebastian, was very interesting. That you said that countries like Netherlands have higher participation of retail investors, and I'm sure that if you link that with entrepreneurship, that culture of not being scared of taking risks and the culture of not being scared of failures actually encourages risk taking. And I think that's what makes Silicon Valley special. And perhaps that's the reason why cities such as Netherlands or even markets such as AIM have been able to encourage a lot of entrepreneurship because they're not scared of failure. That's almost a part of it. There's another question. It's a comment from Jose Hedamota. For startups to develop, the biggest bottleneck are the foreign exchange laws. 2 years effort have not produced any results. There are workable options to address concerns, but no luck yet. It's saying great work by SECP, but it will not yield positive results without addressing the issue. So it's a great comment. Thank you for that, for them. It's a very pertinent question, and maybe I can direct that question to Shauzab. That FX rules, and I know they are, it's not SECP, it's more a state bank issue, but we'd love to have your comments on the FE laws, which are a bottleneck for getting investment into Pakistan.
No, I can actually indirectly answer because of my position and this being area for my fellow regulator. And I largely agree with Hussain that although there are a lot of changes which we made and which are probably very positive when we hear from entrepreneurs or these startup investors, but his question is right. This is probably, and that is one of the reasons that most of the investment which are coming into Pakistani market, they are actually coming in directly in the private equity or venture capital space. They have created companies outside Pakistan. So the thing is that which actually I also spoke about when I was discussing during my presentation. I think our fear always was based on currency, and with the current policy, both on the monetary policy side, fiscal and overall government business objectives, I think on the macro level or about 40,000, 60,000 feet view, this thing is being addressed. How, for example, State Bank has stopped intervening in the currency markets. They are letting the market to decide the rates. I think in terms of the information they are getting from the banks and all that has improved significantly. The other thing which has happened on terms of documentation of money flows, that is also positive. Third thing is that instead of focusing or increasing the spending through imports, the government focus is on export-led growth. So all of these things are towards where actually the currency position of the country would become comfortable over the period as we move forward. First thing is that obviously we are short on hard currency and for a longer period of time, but I think the direction is right, and I also agree with Hussain's comment that can be addressed through certain ways while the risks are or will be mitigated by the proposed solutions. But I foresee that thing happening soon now because of the overall environment framework and at the high level policies. So I'm quite hopeful that it would be addressed in next few months.
Thank you for that, Shauzab. And we are way over time, but I'll just put in one more question, especially to you, Shauzab. It's for you, Shauzab. When I hear Gokal and Sebastian's presentation, it comes across very clear that there's competition between the exchanges. They are trying to go and win more clients by encouraging companies to come and list, and that competitive zeal almost forces them to to be innovative, develop outreach programs. In Pakistan, there has been a debate, and I think Khalid Mirza speaks a lot about that, for the desire for competition for the stock exchange. What's your opinion on that? Do you think the lack of competition for Karachi Stock Exchange is a hurdle? What's your view on competition for exchanges?
I think broadly what you're saying is right. As I've explained you, because this is not one single point, because we are not working in some sort of oasis or island where everything else is. So we cannot create an island, or we cannot create an oasis. If the country has, as compared to sort of its formal businesses, informal businesses are much larger in number, where overall structure, contract enforcement is an issue. For example, then there are certain other issues which actually, for a formal business, for example, if I start a business, I will prefer to keep it as informal as to the date applicable. So there's a whole structural issue and whole legal environment issue. So it is not one, because you will not see that there are about 100 companies lining up every year and who are eligible for IPOs or even for growth board, number one. Number two, you will not find companies, for example, that they are not being brought to the exchange because exchange is unable to sort of market themselves to them. So the point is that a lot of our businesses are actually raising money through informal sources, and simultaneously they are profitable, they're making good money, they are able to pay back the returns through informal structures. So with the drive on documentation, on the contract enforcement and ease of doing business, once we have a formal business structure which is much larger than we are currently into, for example, manufacturing companies, if there's a large number of manufacturing companies which is largely listed. So whatever the view of people who are pro-competition, I am also pro-competition. But then it is always a sequential thing. You have to do certain things to make an overall enabling environment. So exchanges cannot grow within, as I've already told, it's not about island or oasis somewhere in the middle where everything else around it is not performing. For example, if you see average growth of the countries like Vietnam, like, for example, Bangladesh, for example, India and China, and if you compare our overall growth rate for last 10 years, they're not comparable. Our growth is more on the consumption side, which is services industry and all that, while our manufacturing is sort of going down. So you cannot sort of say that because the exchanges are not competing, so there are not enough IPOs coming in. So the bottom line is that we have to do multiple things and create an enabling environment. And once that enabling environment is there, once the numbers are large, I think we need probably more than one exchanges. But for example, even in the case of exchanges, probably for alternate board, certain other sponsors who are more interested. And even as of now, there's no limitation on number of licenses. Why not any entrepreneur come to us and say, okay, I want to set up another exchange? Because they do not see business case. If I want to put in money, I need to have a business case. So I think with positive changes coming in the country at the macro level, that would definitely seep in, and you will see another few months time, or maybe another 12 to 18 months, a lot of more positive activity both on the growth board side and main board side.
Well, thank you so much, and I totally agree. I think there's a lot of positive changes which have come, and so best of luck to you for that. And I think it's a great work which your team has done. Gokal and Sebastian, thank you so much for your time for this. And
thank you.
I think what Sebastian said about equity culture, I think that's a really important thing, that these exchanges with such a long time period and have developed an equity culture, and some countries have more of it and some have lesser, and as for me personally, and also for KSB, it's a great desire and an aim and an ambition to see more Pakistani companies raising capital internationally in the exchanges which you represent, and also the others, and to grow and expand, and to emulate the examples the case studies which you guys have mentioned in your presentation of some great companies, Adyen and the companies listed in the UK, Trainline and others. So thank you for this. This was very helpful for me, and I'm sure the audience also liked it. Thank you for your time.
Thank you very much.
Thank you.
Thank you very much.
Soon.
Thank you. Thank you. Goodbye.
Thank you.
Bye-bye.
Thank you, everyone.
Thank you.
Bye.